The CME Group is launching E-Nano Futures on August 24th. And so today we're covering everything that retail traders need to know, plus a quick little update to my last little nano video. So if you have ever felt priced out by trading the S&P 500 or NASDAQ at these new all-time highs, or if you've been looking for a way to scale in with, a lot more precision and be able to control your trades a lot more, the E-Nanos might be the answer. So we're going to compare the big four indexes, reviewing the specs per tick and point, looking at how we got here, clearing up the metals questions that I kept getting, and breaking down who nanos are really for, and we'll also dive into the commissions now that we have that information. So let's jump right in. Our four major equity indexes are really sisters and not twins. So each really has its own personality and its own family tree and a way of doing business. So I have the S&P 500 in cyan. The ES was born in 1997 at $50 a point. Then had a baby, MES, in 2019 at $5 a point. And now the ES is grandmother to MES's new baby, the NES E-Nanos, and those are at 50 cents a point. So we go from 50 to $5 to 50 cents. Pretty natural little progression there. And then we have the NASDAQ 100 over here in magenta. We have the NASDAQ NQ is $20 a point. MNQ is $2 a point. And the new NNQ is going to be 20 cents a point. Then we have the Dow in purple, $5 a point for the YM, MYM 50 cents, and then the NDOW 5 cents a point. And then last but not least, the Russell is at the RTY futures are at $50 a point. The M2K micros, I don't know why they did that, $5 a point, and then the N2K 50 cents a point. And in order to keep all of the order books clean and orderly and not have any fractional cents, the CME doubled the minimum tick size relative to micros for the nanos. So there's more on that in my last video, but basically this is going to help avoid the fractions of cents that no one really cares about and gives us, and in essence, at the end of the day, we get 10 cent and 25 cent ticks for the nanos in the futures family tree. So when you're adding these to your chart at launch, what you're going to look for, I have the codes down here. It's the NES U24 for the ES, NNQ U26. These are going to be the U26 September front month tickers. All right. Here's how the notional values and the dollar swings compare across the mini, micro, and the nanos. And I'm focusing on today's values so you can really get a sense of how all of this compares. And no one talks about notional values. You should really understand this. So the S&P 500 at around 7,500 has the ES notional value at $375,000. So that's really what you're controlling with one ES mini. So that's what you really have to respect these things. The MES is at 37,500 and the NES is just 3,750. So that gives you an idea of the scale of every single time we scale these down, what that is. Okay, so that's how much we're actually controlling. But then when I'm actually trading, I want to think about how much profit or loss that I'm going to get for different moves that are on my charts that I'm looking to target. And so the way that I think about that is that for every 10 points on the ES futures, I'm going to get $500. And then on the micros, it'll be 50. And then on the nanos, now the NES, it'll be $5. And so similarly, if we're looking for 20 points on the NQ, $400, the micro 40, and then the nano $4. So I just kind of put some comparable numbers on there for y'all. And because they all share the same CME exchange clearinghouse, 10 nanos always balance out 1 micro for margin, which means that you can hedge or scale between them without ever trying or needing to double up the cash. I hope that made sense. But all right, so why did the CME even create the E-Nanos right now in the first place? And that's because the dollar risk expands directly with the index prices. And especially if you're newer, you really need to get some perspective on this. So that's what I have here. Let me explain what I mean. So 20 years ago, back in good old 2006, an average 1% NASDAQ move was about 17 points. So if you convert that to micros, the NNQ, that's about $34. 10 years ago, in 2016, 1% was about 48 points, so about $96 with a micro. Today, in 2026, with the NASDAQ trading around 30,000, a 1% move is 300 index points, and that's a $600 swing with one single micro contract, 6,000 with the minis. When a standard little 1% move creates a $600 swing on a micro, smaller retail accounts really get priced out of proper position sizing. So the E-Nanos compress that exact same 1% daily move all the way down to $60 a contract on the NNQ and $3,750 on NES. So it's going to be a lot easier to take in the smaller retail self-funded accounts. A lot of traders were asking, what about nano gold and nano silver? What about the metals? And so let's just keep this really clear, because this is important to understand too, that the equity E-Nanos like NES, NNQ, NDOW, N2K, and then the minis and the micros that go along with them live on the CME equity index floor and share those equity margin pools on that index. Gold and silver, both the minis and the micros, trade under COMEX and NYMEX exchanges. So they operate under separate commodity margin rules with their own clearing fees and independent broker rate cards. So we can't mix the margin math or the exchanges, back and forth across the index equities like that. That's totally separate product. All right, now let's get into some even more important numbers maybe, and that's the commissions and fee drag. So the CME has confirmed that the E-Nanos fall under the equity index fee schedule, but they will not get the member volume discounts. So when folks are in the comments commenting, sometimes crying about the commissions, what they're really talking about is the ratio of the commissions to the value of a tick. And it should affect how and why you might want to use the nanos. So on standard E-minis, all in round turn fees, the commissions and fees for a round trip trade are $4.50. So with a $12.50 tick, you break even in less than half of a tick. On the E-Nanos, all-in round turn fees are going to average 40 cents to 70 cents between the CME clearing, NFA, and broker commissions. On Nano ES, the all-in fee is around 50 cents, and with a 25-cent tick, you need 2 ticks just in order to cover your break-even costs. If that sounds dramatic to you, you're probably micro-scalping in a prop account. And if it doesn't, you're probably looking to take slower paced trades off of the hourly in your self-funded account. So from minis down to micros, we go from needing a fraction of a tick to needing a couple ticks just to cover our costs for the trade. That's why the nanos are built for larger swing trades and not these quick little 1-point trades. Alrighty. And here's how E-Nanos could be a game changer even if you're still trading on prop accounts. Or maybe this will be a game changer for prop firms. We'll see. But that's if you can use overnight swing accounts. So if you have an account that has swing trading enabled, like the Phidias premium accounts, shout out Phidias, by the way, use code BULLBARBIE. but you can hold positions overnight without risking, losing your account and disqualifying if you have any crazy trailing drawdown or any of the opening session gaps, because you're going to want to use a smaller asset than the minis to do something like that. Using nanos can really help you get into those positions with some extra buffer. And the other thing is, if you want to do a multi-tier scaling where you enter 10 nanos instead of 1 micro, that way you can enter in a zone instead of a specific level and make sure you get in. And you can also bank your partials on the way up. You can have multiple price targets. You can take profits at target 1, at target 2, leave a runner. It gives you some more flexibility with that trade and getting to where it makes it a lot easier to keep your trades from turning back to red on you if you're able to scale in and out. So where can we expect to trade these? The brokers that are confirmed for launch right now, I just checked, are NinjaTrader, 𝗙𝗵𝗿, they're the same company, Robinhood, and AMP. I'm expecting a lot of the other big brokers to make announcements today, tomorrow, and the next day. So the brokers that are rolling this out are Interactive Brokers, Webull, TradeStation, and Charles Schwab, also known as thinkorswim. So let us know if you've seen those updates. Keep us updated in the comments. The other things that I think we can kind of expect is to have no extra data fees. So the E-Nanos are going to use the CME data that you already have on your equity feed if you're trading the E-minis or the micros. But also you should be kind of careful, and we really need to use limit orders at launch. The market makers will still be seeding the liquidity basically during launch week. So if you use limit orders, it'll help you if we get in a situation where we have some wide bid-ask spread and extra slippage, just because of this being a new product and everyone's still making the liquidity happen. So you don't want to become the market maker's lunch. Use the limit orders. So I want to know, are you going to be testing E-Nanos on launch on August 24th, or are you going to stick to the micros? What's your plan? Let me know in the comments. And if you want to come hang out in our free Discord and talk about it launch week and beyond, or download some of our custom tools, you can get entered into our giveaways. Just join us over at thetradingranch.com to find all that information. And of course, if you're taking a prop firm challenge or looking for broker discounts and want to send me a thank you at the same time, you can use code BULLBARBIE at checkout across all of our partner links at bullbarbie.com. Manage your risk, use a stop loss, and I'll see you in the next one. Love you. Bye.